In early February 2025, the United States, under President Donald Trump, implemented a 10% tariff on all Chinese imports, citing concerns over trade imbalances and the surge of fentanyl entering the country. In response, China announced countermeasures, imposing tariffs on selected U.S. goods, including a 15% duty on coal and liquefied natural gas, alongside a 10% tariff on crude oil, agricultural machinery, and specific vehicles. Economic analysts warn that prolonged trade tensions may contribute to rising inflation in the U.S. and a deceleration in GDP growth. These economic strains could prompt the Federal Reserve to reconsider its monetary policy, potentially affecting the value of the U.S. dollar. President Trump has maintained a firm stance on trade policies, particularly regarding major economic competitors such as China and BRICS nations. He has explicitly warned that if BRICS countries transition away from the U.S. dollar for international transactions, a 100% tariff will be imposed on them. Taking to Truth Social, Trump asserted that the era of passively observing BRICS nations move away from the dollar is over. In response to these aggressive threats, BRICS countries have taken significant steps to decrease their exposure to the dollar, primarily by making substantial investments in gold reserves. Collectively, BRICS nations now hold more than 20% of the world's gold reserves, with Russia and China alone accounting for 74% of this total. This accumulation is seen as a strategic move to counterbalance the dominance of the U.S. dollar and strengthen their economic sovereignty. In January 2025, the People's Bank of China expanded its gold reserves for the third consecutive month, adding around 0.16 million troy ounces, equivalent to roughly 4.98 metric tons. This brought China's total official gold reserves to about 2,285 metric tons, making up approximately 5.5% of its total foreign exchange reserves. The PBOC had previously paused gold purchases for 6 months before resuming acquisitions in November 2024. This renewed accumulation aligns with a broader trend among global central banks that are diversifying reserves in light of ongoing geopolitical and economic uncertainties. In 2024, central banks worldwide collectively increased their gold holdings by 1,145 metric tons, marking the third consecutive year where net purchases exceeded 1,000 metric tons. This sustained demand for gold has been a key driver behind the rise in gold prices to record highs. As of early February 2025, gold prices have surged to just under $2,900 per ounce, compared to $2,050 a year prior. Analysts attribute this rise to gold's status as a safe haven asset amid global economic instability and geopolitical tensions. Experts suggest that China's renewed gold acquisitions may also be politically motivated, influenced by global political shifts. Economist David Q from Bloomberg Economics noted that the PBOC tends to increase its gold purchases following major geopolitical developments, highlighting the role of political factors in these decisions. Over the past decade, China has taken strategic measures to decrease its reliance on the U.S. dollar, a process that has continued despite warnings from former President Trump. A key element of this strategy has been the steady reduction of its holdings in U.S. Treasury securities. At its peak, in November 2013, China held approximately $1.316 trillion in U.S. debt. However, by November 2024, this figure had dropped to roughly $768 billion, indicating an ongoing sell-off. Analysts suggest that China is reallocating its reserves into alternative assets such as gold and euro-denominated securities to mitigate risks associated with dollar dependence. This shift is driven by concerns over U.S. economic stability, rising inflation, and Washington's increasing use of financial sanctions as a geopolitical tool. Trump has repeatedly cautioned China against moving away from the dollar, warning that such a shift could destabilize global markets and strain trade relations. However, Beijing remains committed to reducing its exposure to potential financial pressures from the U.S. In recent years, China has actively promoted the yuan in global trade and investment, securing agreements with multiple nations to conduct transactions in yuan rather than U.S. dollars. Among the BRICS nations, Russia has emerged as one of the most aggressive buyers of gold. In 2023, the Central Bank of Russia expanded its reserves by approximately 300 metric tons, effectively doubling its yearly acquisition rate compared to previous years. From 2018 to 2022, Russia had been purchasing an average of 150 metric tons annually. The sharp increase in 2023 was largely in response to escalating geopolitical tensions and economic sanctions imposed by Western nations. These sanctions limited Russia's access to conventional financial systems, prompting it to bolster its gold reserves as a safeguard against economic restrictions. Russia's substantial gold acquisitions serve multiple strategic purposes. Gold is a globally recognized asset that cannot be easily seized or restricted by foreign governments, providing Russia with a reliable store of value in the face of economic sanctions. By expanding its gold reserves, Russia aims to stabilize the ruble and reduce its dependence on the US dollar in international trade. Additionally, possessing large gold reserves enhances Russia's financial standing, allowing it to negotiate global economic partnerships without being entirely reliant on Western financial institutions. India remains another major player in the global accumulation of gold. In 2023, the Reserve Bank of India increased its gold reserves by approximately 200 metric tons, a rise from its annual average of 150 metric tons between 2018 and 2022. This steady increase reflects India's deep-rooted cultural connection to gold, as well as its evolving economic strategy. While gold has long been associated with wealth and prosperity in India, the Reserve Bank's purchases indicate a more deliberate effort to use gold as a financial asset to fortify national reserves. China continues to lead global gold acquisitions. In 2023, the People's Bank of China expanded its gold reserves by about 250 metric tons, up from the 200 metric tons it had been adding annually between 2018 and 2022. This continuous increase underscores China's long-term goal of diversifying its foreign exchange reserves and reducing reliance on the US dollar. This initiative is part of a broader strategy that includes promoting the yuan in international trade and developing alternative financial structures within the BRICS framework. South Africa, historically one of the world's largest gold producers, has maintained a steady pace in accumulating gold reserves. In 2023, the South African Reserve Bank added roughly 50 metric tons to its holdings, aligning with its annual average of 45 metric tons between 2018 and 2022. Despite this stable growth, South Africa has encountered challenges related to domestic mining output and economic policy shifts. Global fluctuations in gold prices, coupled with local economic conditions, have influenced the country's gold purchasing decisions, leading to a measured but consistent increase in reserves. Before continuing, if you've been finding this information insightful, consider supporting our work by hitting the like button. Your engagement helps us reach a wider audience, and your comments provide valuable feedback. Now let's dive back in. For decades, the US dollar has held its position as the dominant global reserve currency, largely due to pivotal historical developments. Following World War II, the 1944 Bretton Woods Agreement established a new international monetary system, linking major currencies to the US dollar, which was, in turn, convertible to gold at a fixed rate. This framework solidified the dollar's role at the center of global finance. Even after the Bretton Woods system was dismantled in the early 1970s, the dollar continued to dominate, supported by the strength and stability of the US economy. The dollar's global dominance has provided the United States with significant economic advantages, often referred to as an exorbitant privilege. This term, coined by former French Finance Minister Valéry Giscard d'Estaing in the 1960s, highlights key benefits such as lower borrowing costs and the ability to maintain trade deficits without immediate economic consequences. Following the September 11, 2001 attacks, the U.S. expanded its use of financial tools as instruments of national security policy. This practice, commonly called the weaponization of the dollar, leveraged the currency's global influence to impose economic sanctions and exert geopolitical control. The U.S. government's authority over international financial networks, such as the Society for Worldwide Interbank Financial Telecommunication, SWIFT, enabled it to monitor and restrict financial transactions involving specific nations or organizations. In response to these measures, numerous countries have sought to diminish their dependence on the US dollar, a trend referred to as de-dollarization. China and Russia have been at the forefront of this movement. China has taken steps to internationalize the yuan by encouraging its use in global trade and establishing currency swap agreements with various nations. Meanwhile, Russia, facing economic sanctions, has increased its gold holdings and promoted trade in alternative currencies. Recently, China has intensified its gold purchases as part of a broader effort to decrease its reliance on the dollar. The People's Bank of China has steadily expanded its gold reserves, with reports indicating that its holdings grew for the sixth consecutive month in April 2023, reaching a total of 2,276 metric tons. This analysis examines China's strategic accumulation of gold and its far-reaching effects on the U.S. economy and the global financial system, particularly regarding the Trump administration's ability to counter China's economic rise and geopolitical influence. China's deliberate increase in gold reserves in recent years marks a significant shift in its approach to national reserves and global economic strategy. Traditionally valued as a hedge against financial instability, gold has re-emerged as a fundamental component of national reserve strategies amid ongoing economic and geopolitical uncertainties. This report provides a comprehensive overview of China's growing gold acquisitions, exploring the underlying motivations, key contributing factors, and broader implications for global markets and international relations. China's engagement with gold is deeply rooted in both cultural and economic traditions, evolving alongside its rapid economic expansion and integration into global trade. Historically, gold symbolized wealth, status, and prosperity in China, mainly used in jewelry and cultural artifacts. However, in the modern era, particularly since the early 2000s, gold has assumed a more strategic role in China's foreign reserves. Between 2018 and 2023, China's annual gold purchases showed a clear upward trajectory, reflecting a deliberate and aggressive accumulation strategy. Beginning with approximately 250 metric tons in 2018, purchases surged to an estimated 550 metric tons by 2023. This increase has been driven by economic stability, attractive gold prices, and heightened geopolitical tensions, particularly with the United States. By December 2024, China's official gold reserves had reached approximately 2,264 metric tons, establishing it as one of the largest holders of gold globally. China's reasons for increasing its gold reserves are diverse, spanning economic, strategic, and geopolitical considerations. A primary motivation is the diversification of its foreign reserves. Historically, China's reserves have been heavily concentrated in the US dollar, which accounted for about 60% of its holdings. By diversifying into gold, China aims to mitigate risks associated with currency fluctuations and potential devaluation, thereby reinforcing the stability of its reserve portfolio. Gold serves as a hedge against inflation and currency depreciation, ensuring the purchasing power of reserves remains intact during periods of economic uncertainty. Additionally, by shifting reserves away from dollar assets and facilitating trade in alternative currencies such as the yuan or gold, China insulates itself from potential U.S. financial sanctions. Unlike dollar-based assets, gold reserves cannot be frozen or controlled by the U.S. government, making it significantly more difficult for the Trump administration to isolate China economically or impose punitive measures on its companies. The Trump administration's trade policies, particularly its tariff-driven approach to China, heavily relied on the central role of the dollar in global commerce. These tariffs were intended to pressure China by increasing the cost of its exports, thereby strengthening U.S. producers and exposing vulnerabilities in Beijing's economic model. However, as China advances trade agreements in yuan and continues to amass gold reserves, the long-term effectiveness of U.S. financial dominance remains uncertain. By reducing its exposure to the global dollar system, China has effectively weakened the Trump administration's ability to leverage economic pressure through dollar-based mechanisms. The use of alternative payment systems and bilateral trade agreements has helped China counteract the effects of U.S. tariffs, making it increasingly difficult for Trump to force Beijing into compliance with his trade demands. As China diversified its reserves, reducing dependence on U.S. Treasury bonds and limiting vulnerability to dollar fluctuations, it gained greater flexibility in managing economic conflicts with Washington. China's strategy of accumulating gold and decreasing reliance on the dollar aligns with its broader objective of strengthening international partnerships, particularly with nations seeking alternatives to U.S. financial dominance. Initiatives such as the Belt and Road Initiative, BRI, have provided an economic framework that reduces reliance on the dollar, instead emphasizing transactions in yuan or gold-backed trade agreements. While the Trump administration pursued an America First approach, seeking to weaken multilateral institutions and reinforce U.S. influence, China's de-dollarization efforts, combined with its gold-backed economic strategies, offered a viable counterbalance. For many nations wary of dollar-based sanctions, China's economic vision has become increasingly appealing. Trump's efforts to isolate China by discouraging allies from engaging with its economic initiatives faced resistance, as Beijing presented concrete alternatives. The use of gold and local currencies in trade agreements provided a mechanism for bypassing U.S. financial systems, thereby diminishing Washington's ability to utilize economic isolation as a diplomatic weapon. Throughout Trump's presidency, the U.S. expanded its reliance on financial sanctions and dollar-based economic tools, leveraging its dominance to restrict access to international financial networks such as SWIFT. This strategy was central to efforts aimed at curbing China's technological advancements, particularly targeting major companies like Huawei and key industries such as semiconductor manufacturing. However, China's increasing gold reserves and alternative financial arrangements reduced the effectiveness of such tactics, undermining the administration's economic pressure campaigns. As China continues expanding its financial influence through strategic gold accumulation and alternative trade partnerships, the global economic order is undergoing a profound transformation, one that challenges the long-standing supremacy of the US dollar. China's shift away from dollar-based reserves and its growing gold holdings are reshaping global currency dynamics. By promoting the internationalization of the yuan and increasing its reliance on gold, China is paving the way for a more diversified financial system. This shift, coupled with the BRICS nations' collective push toward alternative trade arrangements, is challenging the long-standing dominance of the US dollar. As economic and geopolitical tensions continue to evolve, China's gold accumulation strategy will likely play a crucial role in shaping the future financial landscape. The question remains, will this be the turning point that redefines the balance of global financial power? China's large-scale gold acquisitions have had significant repercussions for global markets, influencing gold prices, market liquidity, currency valuations, and worldwide mining operations. The country's persistent and substantial demand for gold has contributed to rising gold prices, especially during times of economic uncertainty. This sustained demand has fueled investment in gold and related financial instruments, reinforcing a bullish market outlook. Additionally, China's active participation in the gold market enhances liquidity and increases market depth, making gold more accessible for investors and other nations. This added liquidity contributes to overall market stability by mitigating speculative fluctuations and establishing a reliable demand base. However, rapid spikes in gold demand can also introduce volatility, leading to price surges and increased speculative activity. Beyond pricing and market stability, China's shift away from the dollar and its growing gold reserves are reshaping global currency dynamics. By promoting the internationalization of the yuan, China is fostering a shift toward a more diversified monetary system, potentially challenging the dollar's dominance. The demand-driven expansion of gold holdings is also impacting global gold mining industries, driving increased exploration and innovation in extraction methods. However, this expansion raises concerns regarding environmental sustainability and regulatory compliance, as intensified mining operations require responsible and eco-conscious practices to mitigate long-term ecological impacts. Looking ahead, China's strategy of accumulating gold is expected to remain a defining factor in its economic and geopolitical positioning. Projected trends indicate that China's annual gold acquisitions may continue at a robust pace, potentially surpassing 600 metric tons by 2025. The country is likely to set specific long-term targets for gold reserves as part of its broader foreign holdings strategy. Future policy shifts may involve more adaptive reserve management practices, allowing the People's Bank of China to modify its gold holdings in response to key economic indicators such as inflation and currency valuations. Increased transparency regarding reserve levels and purchasing strategies could enhance global confidence in China's economic policies, while domestic initiatives may promote gold mining and recycling efforts to ensure a steady supply in alignment with national reserve targets. Technological advancements in mining and gold extraction will also shape China's ability to sustainably manage its reserves. Innovations in extraction techniques can improve efficiency and reduce environmental impact, while the integration of blockchain technology in gold trading and tracking could enhance security, transparency, and trust in financial transactions. The evolution of global economic and political conditions will continue to influence China's gold acquisition strategies. Shifts in global growth rates, political stability, trade policies, and environmental regulations will all play a role in shaping the country's gold purchasing decisions. As sustainability considerations gain prominence, tighter regulations and corporate responsibility initiatives will drive a transition toward more environmentally conscious gold mining practices. That concludes our analysis for today. We appreciate your time and support. If you found this content informative or thought-provoking, consider liking the video and subscribing to stay engaged with our community. Your support is invaluable and helps us continue delivering insightful content. Thank you for watching.